good morning. You're watching The Market right here on 80 now with me, Ayesha, Faridi, Nikunj, Dalmia, Bash in the studios. And important week this one. Lot of earnings to digest. Today, of course, it'll be all about the L&T buyback, Tata Motors numbers, and of course the swap between DVR as well as the cash stock. But in the meantime, a lot of other macro triggers as well. Remember, you've got the F&O expiry this week. You've got the all-important US Fed meet, and energy prices is something that we're also going to be looking out for. A 25 bips hike is something which is expected. It is expected to be the 11th increase since March last year. And the question is really whether this is going to be the last of the rate hikes or not. Is it going to be a hawkish pause or a dovish hike? A lot of questions, Nikunj, for the market to ponder.
See, Ayesha, frankly, this is turning out to be a week where market has done nothing special. But that's perfectly acceptable. I mean, markets are not expected to do everything special on a daily basis. So markets have done nothing special, which I think is perfectly fine if you really look at the market from the eye of the Nifty. Fed looks like it's going to be a no-show. We look at the Fed positioning of the market. And where the chink in the armor now seems to be there is that given the way how crude has moved, what's happened to the other elements in terms of natural gas prices, other energy prices, how they've gone higher. So let's first address Fed. 25 bips is expected. There is just no price action. I think the graphics are taking slightly long right now. And this is the positioning of the market. The VIX is flat. The dollar index is at 101. And crude is the only moving part right now. So from a global Fed standpoint, I think it is pretty much looks like Fed is going to be a no-show.
Okay, Fed perhaps is going to be a no-show, but if we just take the clock back to what we recorded in yesterday's trading session, it was an interesting day of trade. We wrapped up absolutely flat with the broader markets pretty much neck to neck with the frontliners. It was 19,680 by the time we shut shop, with names from the metals basket really taking leadership as well as select Adani Group stocks. But the India VIX remains at record lows. You've also got the F&O trends pointing towards a short covering at a 15-point premium on the Nifty, and pretty much, Nikunj, choppiness that we've been seeing for the past many days.
See, the market is not moving linear, which is okay. But the market is not reversing, despite the levels at which the markets are. So markets have turned choppy, but the fact that Nifty or the India VIX has touched a record low, maybe this is the first sign of complacency, or maybe this is the first sign that the F&O markets are telling you that, okay, whatever the valuation folks may be talking about in terms of valuation, I guess right now we don't see a sharp reversal. So it's very difficult to judge that why the India VIX at this kind of a record high is at a record low. But if I look at the F&O setup, and we are purely addressing the trader here, the rollovers have not been very impressive. I expect them to pick up between today and tomorrow. Tomorrow, of course, being the F&O expiry. Between the Bank Nifty and Nifty, I would vote for the Bank Nifty more and Nifty less, because for the Bank Nifty, the numbers have been strong. And we did see some disappointment in PSU banks in terms of price action, but that really does not matter. I think SBI holds the key there. Nifty, well, minus Reliance, minus Infosys, the Nifty in a sense will be a bit of a struggle there. And so if you have to choose between the Bank Nifty and the Nifty, I think there is more strength in the Bank Nifty rather than the Nifty. I expect the, in general, the F&O picture to pick up. There's nothing great which seems to be indicating that everybody's in a rara mood to roll over. Similarly, there's nothing scary which tells you that markets are looking bulky and there is no interest. It's just about okay. I mean, the word which you want to, searching for this word, that what defines the market right now, and I think the word right now is that markets are in a mood to rest it out or take a monsoon break or perhaps just consolidate.
Yeah, absolutely, in pause mode, if you will. Tata Motors, that's going to be the big discussion point this morning. Firstly, on the earnings, and it's quite surprising that actually it's JLR and the CV business growth which has managed to fire up for Tata Motors in the first quarter. But the bigger talking point, I think, is going to be the announcement of the DVR shares, Nikunj. The fact that the management is now planning to convert the DVR shares into ordinary shares, and DVR holders are going to get a 23% premium in the swap with the ordinary shares.
Tata Motors will be perhaps one of the biggest turnaround story in the history of corporate India, from where they were. And they've had two scary, near survival scenarios. One, what happened post 2008, and then what happened post COVID. They've survived. And, it's a hallmark of what Tata Group can do in terms of turning a business around. Look at the fat loss what they had and look at the fat debt what they had. From there to engineer and to master this kind of a turnaround, I think is extraordinary. There are two things here, the DVR and then what happens to the numbers. Let's discuss the numbers first and we'll discuss DVR. The numbers independently, keep the DVR news aside, I think they're good. They're firing full cylinders. GLR margins have been strong. The stock has seen a run up. So independently you can justify the rise, but based on these numbers, you may not get a price upgrade. Nobody should expect a serious price upgrade. A little bit of tinkering on the upside in terms of targets is something which is there if you look at brokerage notes. But margins and the trajectory and the environment and the commentary from the management, which is the group CFO, Mr. V. Balaji, I think seems to be really indicating that they've got the mojo back as far as the core business is concerned. Now let's look at DVR. Why are they doing it? I mean, why would you do something like this? You're doing something like this because you want to simplify the capital structure. You know, an instrument like DVR is used when you want to raise more capital. They've struggled. You know, Tata Motors has a lot of legacy. It was called as Tata Locomotive, then it became Telco, and then it is Tata Motors now. So it has a lot of legacy. And you know, when a legacy company goes through, they've used different instruments to raise capital in the past. So they're simplifying the structure. Now the DVR buyback is at a premium. So logically the DVR will rally. That's logical. And there would be an arbitrage which would be at play. Rather than us commenting on something, let the market discover that, you know, where the price would be at play, because there would be an arbitrage, there would be a time analysis, there would be an adjustment. But in terms of a direction move, I think DVR should fly and Tata Motors stock should not fall. What it does to the aggregate picture is your equity goes down by 4%. When equity goes down by 4%, the EPS goes up by 4%. If EPS goes up by 4%, naturally there would be implications of it in terms of earnings upgrade and in terms of the price. So where does, to cut a long story short, they're firing full cylinders. Yeah. The stock move is now justified.
Is it sort of, sorry to interrupt you, Nikunj, effectively like a buyback without actually spending a rupee when it comes to how you would read it?
Exactly, it's a buyback without spending a rupee, but in this case it really applies to the DVR shareholders. Thank you for just putting it so simply. But what would be the net impact of the buyback? The equity share capital reduces. But in a buyback, the company uses the capital. If Infosys is doing a buyback, if TCS is doing a buyback, they're using a cash kitty. In this, the net impact is not going to be there. That's how it's been engineered. There's nothing wrong in it. I mean, it's perfectly logical and perfectly legal. But the fact that they're considering it just tells you that, look, they're thinking about creating more value for shareholders. In my book, if I have to talk about one of the biggest turnaround stories I've reported as a financial journalist in the last 20-25 years, I think Tata Motors would be right at the top. I mean, really impressed.
And we're forgetting the Nano episode. So it's literally sort of risen from the ashes.
So, you know, Nano did not damage their balance sheet. Nano was like an experiment went wrong.
Yeah.
But the balance sheet got damaged in 2008 because of the fat debt they had. Then there was a slowdown in Europe. Then they had to deal with COVID. The company, because was a Tata group of company, was able to deal with its debt problem. Any other standalone company would have really struggled. And look at what happened. I mean, we are forgetting what happened to GM. We are forgetting what happened to some of the classic US companies. Ford, GM, they've really struggled in the last couple of years because of the international business. Excepting some European companies, which is BMW, I'm not even getting into Tesla, but BMW or Audi or Volkswagen to some extent, the American car companies have really struggled because of financial leverage. GM, where is GM? I think GM is now almost junk.
Absolutely. In fact, you know, let's hear out P. Balaji, the group CFO of Tata Motors, what he had to say post the earnings as well as the DVR swap announcement.
The challenge with the DVR shares has been that of the various, I mean, we are amongst the few companies, large companies will probably be the only one having the DVR shares there. This instrument had lost its charm somewhere in 2010. When the regulator had concerns on the use of the instrument, and thereafter it's been restricted only to startups. So while we have tried every trick in the book to infuse liquidity into it in terms of a QIP, a rights issue, putting it in the F&O segment, even then this discount that is there started averaging at about 48% on if you took at from the beginning to now. The average is about 48% discount is what this is trading at. There is almost a understatement of Tata Motors' overall market cap because of this discount which is there, which despite everybody's best effort is not going away. And therefore, we have said, and it didn't matter when we declared a dividend, even then the discounts continued. So therefore, that's basically because there is clearly a reluctance to come into this instrument, and therefore the discounts continued as they did. And the solution that we have tried to put together now, I think, cracks this problem fundamentally.
Okay, this is definitely going to be a stock to keep on our radar, but of course not the only one, because it's a hectic day on the earnings calendar. Of course, we'll be digesting earnings of last evening, but today we've got a whole host of companies that will be coming out with their numbers, large caps at that. Axis Bank is going to be in the limelight. You could have margins under pressure. Tata Consumer, we're watching out for the India food business, how it's likely to grow. Cipla, Dr. Reddy's within the pharma basket. It's expected to be healthy, particularly for the US business. BPCL, Bajaj Finance, Nikunj going out of breath, but it's an important day. Which ones would you be tracking with a magnifying glass?
Bajaj Finance.
Okay.
Why? Because the stock has performed and you know the commentary. Now, could it be a case of buy the rumor and sell the news? Because Bajaj Finance has already done a special move given where we got the quarterly update. Second, I think would be Dr. Reddy, purely looking at that, the stock has been in performing stock and the US business is likely to bounce back. PPCL, frankly, nobody cares and people should not care. It's a difficult number to call given where the energy prices, GRM, retail margins are moving. Axis Bank, well, they have to now live it up in terms of what the industry benchmark is. If HDFC Bank and ICICI Bank are talking about mid-teens growth, and when Amitabh Chaudhary told us that, look, he's looking at credit growth slowing down, so will Axis Bank be the odd one out? Tech Mahindra, nobody frankly cares. So from a market standpoint, financials, Bajaj Finance and Axis Bank. From a curiosity standpoint, I think it would be Tata Consumer, but it's not a moving stock, even though it's a large stock. And then Dr. Reddy.
Absolutely. A lot of important earnings to digest and a lot of news flow as well. Let me welcome on board Suresh Srinivasan Iyer, the MD and CEO at Canfin Homes. Suresh, good to have you on the show. Tell me, what's been the reason for detection of this fraud once again at Canfin Homes, despite the processes being put in place last year? Because a similar fraud was detected, as recent as 2022 as well.
Basically, what has happened is last year or some time back, when there were some cases of detected in one particular branch in Rajasthan regarding some fake document submission or something, at that time it was pertaining to the advance side. So Canara Bank also swung into action and had taken this matter up, and there were a lot of process reviews done on the advances side. We also introduced certain controls like introducing perfios, introducing some sanctioning power controls and all those things, and withdrawing certain type of, strengthening the lending process. Thereafter, it was implemented. However, now this particular matter has come on it's not pertaining to the advances side. And obviously, since then, the management also changed and they also brought in. So the mandate was also to basically review the processes and also see whether there is further strengthening possible in line with what the market practices are. So in line with that, in fact, we had initiated a couple of steps. One of them being that we want to have a centralized disbursement and we want to have a CMS because it is decentralized and the disbursement check, signing powers, everything is decentralized. So while doing that process, this process lapse has been found wherein, one of the staff has utilized this this check signing powers and has issued checks in the personal name and has misrepresented it saying that it is a fund transfer. So that is basically the thing which was detected by our own team while reviewing this process. We had already initiated this change of process or CMS, implementation of CMS and centralized disbursement is what we were working on, and that's when this has been detected.
So can you clarify on the fraud amount?
See, obviously, it has come to light only now, and today only we, in fact, arrived at this thing. Otherwise, we had, it was first a small blip at a few checks, so immediately we had the FIR. But when we reviewed the whole thing, the amount was higher. So today only we arrived at this number and we immediately reported to the stock exchanges. So the provisioning will 100% happen in this quarter. So whatever is the amount net of the recovery that is possible, because the amount now has been identified and informed. So now whatever net of the recovery we are having, that will be provided in this quarter, that is Q2.
And Mr. Iyer, what are the steps that you're going to take to stop instances like this in the future? Is the annual inspection of NHB yet to be done?
No, NHB inspection was last done for the year ended March 31st, 2022. For the year ending March 23, it is yet to happen, and now we expect that they should be coming now. As per your first question as to what other steps we are doing, as I mentioned, we had already thought of this. We were working on this centralized disbursement and CMS facility, which will strengthen our process. In fact, post my joining, we had also strengthened on the staffing, training, succession planning, and all those things. Also, we had initiated. And anyway, this risk also we have strengthened post this last year's findings, because Canada had deputed one person who is overseeing risk. So risk parameters also in terms of LCR, in terms of ALM, in terms of our risk matrices, our stock ratios, all of them have already been strengthened. So these are the additional points that we are looking at. And now, once this has happened, we also had a discussion with Canada, and they have also suggested to implement the online digital reconciliation process, which will also have a better and quicker impact on the reconciliation. These are some of the immediate steps definitely we are looking at.
Right. Thank you so much, Suresh, for taking the time out and clearing the air on this fraud. Canfin Homes, the one in focus. Let's also talk markets, and let's bring on board our chartists, Kunal as well as Naresh join in as always. Gentlemen, hi, morning. Kunal, let me come to you. Firstly, a word on the index, quiet consolidation and no complaints there.
Yeah, quite consolidation. No major signs of any change in the trends for the indices. The market breadth remains, a lot more better than what we've seen earlier. Again, that's a sign that the markets are getting into a phase where the churn is more of a consistent process. The only change which I think in terms of data points, which was quite noteworthy yesterday, was the drop in India VIX towards a major all-time low in terms of closing basis below the 10.3 odd levels. That's the only sign of confidence or additional sign of confidence which could complement the market trend. But I think net we are looking at the last 3 or 4 days, the indices retracing by 300 odd points, Nifty falling from 19,990 mark to 19,650 approximately. We've been trading. So I think it's a zone of consolidation which is happening over the last 3-4 days.
Okay, let's get in Naresh's view as well on the markets. And Naresh, what's your outlook given the fact that yesterday we wrapped up the trading session at 19,680, watching out for cues from the US Fed as well as a whole host of numbers? Which way do you see the markets headed?
So overall, the same view, 19,500 to 19,600 is a band of support. That was the previous high where the index found, say, a resistance or a pause for a couple of weeks. So that should act as a zone of support. On the upper end, 20,000 remains the resistance. So expecting this zone to continue closer to 19,500, 550 zone is where you want to buy the dip. Till that point of time to be stock specific. Sectoral rotations continue to happen. So we are seeing oil and gas take leadership. So this should continue. The small cap index also saw a little bit of a dip yesterday from the highs. But the trend has been one way across the board. A little bit of a dip would be normal going forward. So that should be expected.
Right, okay. Let's get individual stocks as well. And Kunal, I'm guessing there would be a trade on Tata Motors or no?
No, not really, Ayesha. So 2 buy calls, but then the first one is actually NTPC. In fact, many of the PSU stocks like GAIL, ONGC, NTPC, etc., these stocks had confirmed a classical breakout for themselves in the last couple of days. Yesterday, they saw additional round of momentum, which means that's a good sign of confidence brewing up in the trend for these stocks. So would suggest a buy on NTPC, 210 as the target, stop loss at 195. And the second would be about actually Tata Steel. Metal stocks making a very strong comeback. Tata Steel breaking the resistance of 117.5 on closing basis, which I believe is a very strong breakout for the stock price. So would suggest a buy, 126 as the target, stop loss at 115.
Okay, and Naresh, what strategies on individual stocks are you recommending?
So first is a buy on NTPC, breakout done yesterday above the 197 mark, a new 52-week high. After the previous breakout, did a retest of 185, 190 zones and now making a fresh move. Also on a dividend adjusted basis, this is an all-time high. Clear trend across the power names. So expecting this momentum to continue here. A revised stop loss now at 196 and a target price of 220. Second is a buy on Axis Bank, which is more a risk-reward trade, wherein the stock has been in this tight range. 985 has been the resistance on the upper end. 945 to 955 on the lower end has been the support for the last almost 1.5 month. So keeping a stop loss at 945, expecting a bounce from here. A target price of 1050.
Right. Okay. That's the take coming in on which way the markets are headed and, of course, what stocks you can bet on this morning. But Kunal, on the interesting trend that you picked out on metals, and some of the top movers yesterday were all from the metals universe, right? Hindalco, Tata Steel, JSW Steel. Aside of Tata Steel, do you think this is more of a sectoral trend now at play?
Well, yes, Ayesha. In fact, for the first time, we did not see JSW Steel outperforming most of the other peers. Now, JSW Steel has been a much better as well as a stronger performer for the entire metal pack. The other way to look out for is that when leaders from the entire sector, when they change or when there are additional stocks which act as leaders, like for example Tata Steel, which did yesterday, then I think it's a sign of confidence that the sector is getting a lot more broad-based than what has been earlier. And I think that's a good sign. You look at the technical chart structures for most of the stocks, like Hindustan Copper, the names, which we don't discuss, that often. I think NMDC, etc. Then graphite, HEG, commodity plays, Hindalco, Vedanta to a larger extent. Many of these stocks yesterday gave signs of a strong breakout for themselves coming out of their multi-week consolidation, multi-day consolidation. So that I believe should augur very well for the metal stock, and which I believe should be a trend at play.
Okay, L&T, that's the one which is going to be in focus this morning as well. Not just the numbers were in the scorecard. Anisha looks smart, but the buyback as well in the first from them.
Oh, well, yes, the first buyback that, of course, attempted that earlier back in 2019, if I have it right. They couldn't do it at that time because they didn't get the right approvals from SEBI. But this time around, it has sailed through, and a buyback coming in worth 10,000 crores, bang in line with what the street was expecting. Of course, it's a tender buyback, but the indicative price that they have told right now is up to 3,000 rupees. So we'll watch out for that as well. Now, separately, with respect to the numbers, well, it was a big beat coming in on all parameters. Absolutely nothing to complain as far as the earnings is concerned, because the revenue was up almost 30% on a year-on-year basis. Solid show when it comes to the order inflow as well. Almost a 50-60% uptick on order inflows on a year-on-year basis. A bit of a slight miss if you have to nitpick with respect to the core infrastructure margins, but the management is quite confident that they will be able to make up for the miss this quarter. Now, overall, the brokerages are very, very positive. HSBC, for instance, has raised the target price by a good 400 rupees. Jefferies is saying that the ask rate for the next 9 months is a paltry 2%, and that means that the company will be able to beat its guidance. Remember, for now, they have a guidance of around 10 to 12% in terms of order inflow growth and 12 to 15% in terms of revenue growth. But Morgan Stanley believes that they will be easily able to beat that, and that's why they have 18% with respect to revenue growth as to what they are expecting for FY24. But Nikunj, do you think this is going to be another case of sell-on news perhaps? Or do you think at least here with the buyback support is likely to keep the stock elevated?
See, what happens in the short term is pure technicals, right? I mean, obviously after the buyback news, the stocks spring in a bit of a surprise. So that's really what the trader should actually do. But you could ask yourself the positioning of the stock. Now, the positioning of the stock is a factor of earnings and EPS and PE. Typically, when you do buyback, the future cash flow improves. If the future cash flow improves, if you do a buyback, it means that you're confident of future cash flows and you're confident of, in a sense, the future cash generation which will happen. That, in a sense, in my book, will lead to a PE expansion. So that's one part of the story. Second part of the story is EPS. I think they're sounding confident. The hurdle rate now for the second half is not that strong. The hydrocarbon business seems to be stabilizing. Defense, they're firing full cylinders. Now, the chink in the armor here is that on a sum of part basis, which is what we should always look at L&T, the IT business is very large, and unfortunately the IT business is going through a bit of a downturn. So will the move be slightly restrictive? So whatever good work is happening in the core business, which is defense, engineering, road, construction, could there be a limiting factor which could kick in largely because of the IT business? I mean, L&T is one of those stocks which I think for next couple of years, if you own it, you should simply hold it.
Yeah, there's no reason to sell as of now. At least things are looking on the brighter side. So that's on L&T. Expected to see a pop today as well. But the other one that will see a pop perhaps today is also going to be Piramal Enterprises.
A news coming in that the board might be considering a buyback. It will be considered on July 28th. And just to run you through in terms of what the brokerages are saying, Axis Capital wrote a note. They are saying that the buyback proposal is actually on expected lines. A large part of the street was surprised because we usually don't hear NBFCs coming with buyback. They are the companies that actually need the capital to become the growth driver, but a bit of a surprising move coming in. But the rationale what Axis Capital believes is the fact that the company has excessive capital and the value unlocking from Shriram Finance has mean that there's enough cushion available on the capital base as well. Their current CR ratio is around 31%. What they are expecting is that the buyback price could be at a premium of 25% to current market price, and it could be around 8% of the existing equity base as well. But Nikunj, what do you make of this? We usually don't hear any financial companies coming out with buyback.
Because you need equity capital
Correct.
to grow. Now, if you have the excess capital, which means that are they going to be very moderate and careful about the way they would grow their book? See, for Piramal Finance, there have been two issues: the merger of DHFL and the legacy real estate book, the write-offs which are happening, and they've not been able to scale up some of the core businesses. While you've got this huge capital cushion which comes largely because of Shriram Finance deal, but if you're doing a buyback, that will take care of the return ratios, and that in a sense will boost your ROE. But does that also mean that they're not going to be aggressively lending and they're going to be very, very careful in terms of calibrated growth? That seems to be the message. But the buyback in the near term, of course, it's good news. Of course, it's going to be at a premium. If you frankly look at Piramal Enterprises, compare that with even the bank Nifty. I'm not even comparing it with ICICI Bank or HDFC Bank. Last 3-year change, compare that with any other NBFC. Let's look at it actually before we go to Russian bottle. Last 3-year change of the bank Nifty and last 3-year change of Piramal Enterprise. Similarly, let's look at the 3-year change of 3-year change of Bajaj Finance versus 3-year change of Piramal Enterprise. You can throw in, if you want, even an Aditya Birla Financial. So look at Piramal Enterprise from any angle in last couple of years. The stock has not really lived up to its potential given that it is a Piramal backed company. Now let's look at it, please. Last 3 years, Bajaj Finance is up 133%, Piramal Enterprise is down 32%. This of course includes the pharma split which happens. But in general, the NBFC business has not really lived up to its reputation. If you compare that with, in general, what other companies have done. You add back the pharma also, I think it has still not lived up to its reputation.
In fact, pharma is disappointed from the previous quarters and the kind of numbers they reported.
They're trying to fix it now. I mean, this is one group where they were high promise, great pedigree, strong capital allocation.
And traditionally, they were in the pharma business.
Traditionally, they were the pharma business, and I mean, Mr. Piramal understands the risk very well. I mean, one of this hallmark has been that he never got hit in the IMF crisis. He got that Abbott deal in which he conserved the cash and he did very smart deals which benefited shareholders. Last 2-3 years, they've not lived up to, again, I'm repeating myself, lived up to the true potential. Look, when you see a pedigree stock, you say, okay, Piramal backed company, understand risk, understand management, they should deliver in a great environment, which they've not.
Okay, let's discuss Tata Motors. Anisha, thanks for highlighting those two stocks which are going to be in focus. Let me welcome on board Ashwin Patil from LKP Advisory and talk about what would happen today to Tata Motors as well as the DVR. Ashwin, hi, good morning. Good to have you today on the show. Just wanted to understand, Ashwin, this share swap, while it is a 23% premium in the swap with the ordinary shares for the DVR, tell me what does it mean for the DVR shareholders as well as the Tata Motors stock shareholders?
Yes, it will be like 10:7 kind of a ratio for the DVR shareholders, which means that if a DVR shareholder is having about 10 shares of DVR, then he will be getting 7 shares of ordinary shares. So, that is a kind of a ratio that, it will be definitely benefiting the DVR shareholders because DVR has been already, always, if you look at the past 5 to 6 years or more than that, the DVR shares have been always trading at a discount close to about average. If you take, it's about 43% discount kind of, it has been trading. And definitely they also have got some kind of capital appreciation, but now getting into the main league, the mainstream stock they will be having in their portfolio, and that, clears I would say the picture for only one kind of stocks will be trading on the bourses. They have already cancelled the ADR, and now they are cancelling the DVR. So only one kind of the ordinary shares will be trading on the Sensexes. So that will be, a sort of confusion kind of used to be there. Three kind of stocks trading on three different exchanges. So, that will be clearing the mess that had been created because of that. Confusion in the mind of the shareholders, and that is going to get cleared. Also, on the other hand, if you see, this transaction is going to increase the EPS by about 4%. Yes,
Okay,
that will
Ashwin,
be
so let's understand. I mean, I thank you for that, big picture view. I have a specific question for you. Now that there is going to be price adjustment because the DVR buyback will happen at a premium, do you expect the Tata Motors stock, which is the main stock, to come down and the DVR to go higher? Or we could be in a scenario where the DVR will go higher, obviously, because of the differential gap, but the normal share will also go higher post the number. So it really could be a double lottery for a DVR shareholder. The upside could on the Tata Motors stock and the arbitrage which would be available.
Yes, definitely. That is going to be a win-win situation for both the shareholders, because definitely the DVR shares are going to trade at a higher premium. It will be, once the markets open, they will be trading at a higher value. And Tata Motors, as I said earlier, this trade is going to be accretive for Tata Motors by 4% to its EPS at the bottom line. So that is also going to help the stock. And furthermore, because of the great set of numbers that the company has come out yesterday, we will be seeing capital appreciation in Tata Motors ordinary stock as well.
Okay, Ashwin, great to have you on the show. Thanks really for highlighting, how this entire share swap is going to pan out and what it really means for both the DVR as well as the spot stock shareholders. But here's Sanjeev Hasim telling us what you need to buy and what is it that he's liking in this market.
My top pick here is Titan. I've done a whole survey of what the new sales are doing, what the eyewear business, it's humongous. And I've been traveling city to city. Plus, you have next month Rakhi. And nowadays Rakhi sees as much of deliverance on, because of our emotional touch, rather even as much as Diwali. So I think Titan, even though it's an expensive stock, must be in your portfolio. Now, the others would be select stocks in cement. I think ACC and Ambuja have weathered all storms. They can't trade at a 1/3% discount on EV to EBITDA on Ultratech. So ACC, Ambuja, I'm very bullish, particularly ACC. Given the reach, given that it's one of the lowest cost producers, and given that Maharashtra is going to see a huge humongous, spending by the government. At 1800, ACC must be in your portfolio for a target of 2200. Same with Ambuja, 470, 475 is on the card. The fourth name is a small mid-cap called ABFRL. They're thinking of the public, the real public which buys these. We all go and own these stocks or shirts or pants, whatever, because the affordability factor plays out. And I think that recent acquisition saw downgrades, but over a period of time, that will be cash accretive. At 210, only you will make 50% gains in this stock.
Okay, those are some interesting stock ideas coming in from none other than Sanjeev Hasim, but a lot of earnings as well. So hear out what the managements of Asian Paints said, because that slumped despite double-digit volume growth in the first quarter. The management has cited an uptick in volumes in both urban as well as rural markets, said that the performance in the coming quarter will be largely on the back of the rural demand. And also hear out what Jubilant Foodworks management had to say. They're aiming to stabilize their margins at 23 to 24%. They also touched upon maintaining their functional excellence.
Industrial business, obviously on a clear uptick, giving us double-digit revenue growth, and this is a business which has been growing at this rate for the last quite a few quarters to that extent, and therefore clearly the journey has been strong in terms of what we see going ahead. International, a little bit less up to our expectations in terms of what we expected, but I think the forex tightness, the devaluation, and so on and so forth are a little bit of challenges, but we still see that I think if we are able to kind of overcome Asia business, I think it will kind of give us good growth and good profits as we kind of go ahead to that extent. Overall, from the point of view of operational efficiencies and other things, a lot of work which is happening both from the point of view of sourcing, formulation, and I think this is adding to the softening of the raw material prices and giving us this kind of benefits in terms of what we are seeing to that extent. So net, I think a great start what we see. Just a flash on to the ESG. I think all of you would have seen our annual reports, which has a strong component of intertwining the business with the ESG numbers in a strong manner. I think strong progress with respect to the three areas of environment, social, and governance in terms of what we have kind of taken up.
Without giving any guidance, our internal endeavor in the long run will be to at least stabilize between 23-24%. I think that's a good state to be in. When do we get there? I think it remains a question mark. But I think our endeavor and all our efforts are towards getting to that level. I think 26 was of course unsustainable. 23 to 24 would be a good level to get.
There are a few bottom stores that we need to correct, right? And that have seen a material decline. That number, like I said, is about less than 10%. Will get to about 100 odd stores this year, and that is the only way out of it. And of course, making sure we execute flawlessly in terms of giving a hot pizza on the plate in time. So making sure the functional excellence continues to be high. Those are the pieces, and which will bring back the growth in dine-in.
All right, let's get stock specific then and talk about the charts. And Kunal, why don't you get in your commentary on and Jubilant FoodWorks, given the kind of movement that we saw in trade yesterday? What's the outlook on the charts?
Apparently that stock has been a huge underperformer. I think I remember a phase in the month of May, June 2023, when the stock was on the verge of breaking above the 200 moving average. I think it was at 500 plus levels for a brief period of time. But then the stock has failed to sustain those levels, and even after two expiries, the stock has been unable to surpass those levels. There has been no major change in terms of the rollover positions for Jubilant FoodWorks. In fact, the open interest trends which you look out for, even that's not been very encouraging for Jubilant FoodWorks. So it's very difficult to try and expect the stock to make a dash towards that 500 mark. And I think it's always better to try and wait for that confirmation of a breakout, the breakout of 200 DM, as well as a strong psychological resistance for the stock price. So I would not consider buying the stock at current levels. Even if it dips, for example, I think I would expect the range to be a bit more lower. But I think 500 and above could be a big breakout point for Jubilant Food.
Right. Okay, let's also welcome on board Dipan Mehta and find out what he's making of the market, and of course, a lot of individual stocks which are going to be in focus as well. Dipan, hi, good morning. Let's firstly start off with Tata Motors. What a blowout set of numbers. JLR as well as the CV business growth has been impressive. And then, of course, the fact that they're cancelling the A-class ordinary shares. They've issued 7 ordinary shares for every 10 held for the DVR shareholders. What would it mean for both the DVR as well as the stock this morning?
Good morning, and thank you for having me on your show. I think the best part of the result was this simplification of the equity structure. I was never in favor of this shares which had lower voting rights. I think it's a very bad practice from minority shareholder point of view. And actually, Tata DVR did turn out to be quite popular. But the fact that the management has now decided to consolidate is indeed quite positive. On the whole, I think this is the thing with Tata Motors. The results are always unpredictable. In terms of all the auto companies, they are amongst the most volatile when it comes to declaring earnings. And we never really have a handle on what's coming in from Tata Motors, purely because JLR's performance keeps fluctuating from quarter to quarter. But largely, I think that most of the positives are priced in. And when I look at the entire auto pack, I feel that there are better stocks within the auto sector to buy rather than Tata Motors at this point of time.
Right. Okay, that's the take coming in on Tata Motors and how it's likely to pan out. And if it was not all, Dipan, the L&T numbers, which have of course been above estimates, and the buyback, the first from the company after, I think, a failed attempt back in 2019.
Yeah, that's right, I think, and that was along expected lines. I think that the March quarter numbers were slightly disappointing, but on the whole, on actual basis, they were decent, but below street estimates. And this time around, the numbers have come phenomenally higher than what street was expecting, and markets have receded very well. I think we have not seen such great times for L&T for many, many decades. I think last time I saw L&T surging and doing as well was back in the 2004-2007 rally when it was the top performer. But now I think with increased focus on infrastructure and the way the order book position is shaping up for L&T and the way they are picking and choosing their orders, which means that they are focusing more on margins, they're focusing on return on investments, they're making sure that their working capital or their balance sheet doesn't get stretched when they are bidding for orders. So it does suggest that this is a company which is on a roll. First, a disclosure that we and our clients are invested in it. And I think that from these levels also, it could remain a market leader, stock market leader and outperformer. And the buyback, of course, I think is like the cherry on the cake.
Hi, morning. What's the outlook when it comes to a Bajaj Finance? The stock, of course, has been in focus of late, and given that we're waiting for their Q1 report card today, there is an expectation that the NII growth could lag AUM growth. Your thoughts?
Yeah, well, first again, a disclosure that Bajaj Finance is part of our core holdings across the board in all the portfolios and has done exceptionally well. But I think that this is going to be a blowout quarter for Bajaj Finance. Maybe the stock price may not rally because it is going into an earnings season on a high. So from that point of view, you could expect a minor disappointment in the stock price because generally, when a sell-on news kind of syndrome can also come into play. But it will be a solid quarter, and most of the management commentary or analyst questioning will be around the competitive intensity, because I think looking at Bajaj Finance's business model, it has got many new challenges coming into play. Piramal Enterprises for one, Poonawalla FinCorp, then even Geo Finance is going to be the biggest challenge for Bajaj Finance. So let's see how the company is able to grow even in a challenging time. But there is no denying that when I saw the pre-quarter release, I was absolutely left speechless with the kind of numbers that they announced. So that has built the expectation of a very good set of numbers coming through from BFL.
Since you mentioned Piramal, let me probe a little bit on that, Dipan. The buyback proposal, that seems to be on, expected lines. The market was anticipating that. Of course, the debate here is, would they not need the cash? And why would they deploy it for a buyback? Having said that, the market is pretty positive. They're positive for the stock price. They're saying that this buyback is going to be supportive for the valuations and that they have excessive capital, and the value unlocking from Shriram Transport Finance has created a further cushion on the capital base as well. Just wanted to understand, what is it that you're thinking for Piramal Enterprises, and not just Piramal Enterprises, but perhaps the group entities as well, even a Piramal Pharma, if you've, studied that.
So I think, unfortunately, over the past few years, both the companies have underperformed their peer group, and in a way, again, disclosure via shareholders has disappointed broader shareholders because of various reasons. And Piramal Enterprises, especially, I think it is a company under transformation. They had a heavy focus on wholesale financing real estate developers. Their entire strategy, turned out to be pretty difficult and quite damaging for them, because of which they had to do massive provisioning as well. Most of the provisioning, I think, is over and done with, and now we need to see how the retail strategy is playing out. But there's intense competition when it comes to housing loan, which is the main avenue for Piramal Enterprise at this point of time. They want to enter into many other product lines, but it's a difficult business with high level of competitiveness. And I don't know what really Piramal Enterprises, what competitive edge they bring to the table as well. So looking at the whole picture, it's difficult to create a sell kind of a outlook because the stock price is extremely cheap. But on the buy side, we don't know exactly what the numbers will turn out and how the transformation will take place. So we are just kind of stuck in Piramal Enterprises, and so are many other shareholders, in a kind of a wait and watch mode till something positive comes out or something negative, which leads us to sell off the stock.
Okay, what's the outlook then, Dipan? Just curious as to what we could see in Delta Corp, because of course we've seen massive market cap erosion on the back of that GST news, but then numbers haven't been all that bad in Q1. Do you think that perhaps we can, put all of this negative news behind us? How do you expect the stock to trade?
Yeah, numbers were historic. I think the development which has taken place is post quarterly release. And actually, I'm quite keen to understand what is the management's outlook post this 28% levy on on all the kind of gambling revenues which they have. And it's going to be very tricky for the company. And when there's so much of uncertainty, you just stay away from the stock. I think we are in the middle of a fantastic bull market, and so many stocks are reaching 52-week high, all-time highs, predominantly in the banking sector, in the auto ancillary sector, real estate, capital goods. There are so many positive investment themes playing out that there's no point trying to do bottom fishing in something like a Delta Corp, where there's a great deal of uncertainty as to how the revenues will shape up when there's an additional burden on the actual gambler.
Okay, those are some of the stocks which are going to be in the focus this morning. Z, that's the one which spiked up quite a fair bit, 6%. And if we can just bring up the intraday graph, that was quite an interesting move because it's not like the whole day the stock was, strong. And then you had that spike up come in the 9 minutes of trade, about a 6.25% move there. TVS Motors, that was also quite the strong chart yesterday. And of course, metals as a pack, like we've been highlighting, that has also been strong. Some good traction on an ACC, that was also a buzzer. And then, of course, Asian Paints, India Mart, Interglobe Aviation, L&T Finance, Canfin Homes, these were all the laggards in trade. Kunal, anything peculiar on Z? Because we've seen quite a bit of pullback on the stock.
Yeah, I think it's been a very good recovery of sorts for Z. I think from 170.75, the low which was made this time earlier for Z towards 230, 235 where the stock closed yesterday. In fact, 240 plus where the stock closed yesterday. This seems to be a very good recovery. But the only concern with the charts for Z is the erratic behavior of the stock price trend. So, all of a sudden the stock goes into a 5%, 10% kind of a swing, and then for the next 5 days, 10 days, the stock remains sideways. In fact, it corrects gradually in the next subsequent 5-7 days. That makes the trading a lot more difficult for Z Entertainment. So I think it's best to try and wait out for this volatility to ebb off. Would not be buying the stock at current levels. In case if it corrects back towards 220 mark, that could actually be a good zone to try and go for a long on Z.
Right, let's focus in then on the stocks that will be on the editor's radar in today's trading session. We're starting off with the entire metals basket and then we'll talk about Interglobe Aviation. Now, metals, yes, off late, maybe they've been soft, but there have been a lot of triggers as well, Nikunj, that have led to this.
Look, metal is interestingly positioned. The positioning of metal is not that bullish. It's pretty much neutral. Typically, what I've seen that when energy as a complex, they make a comeback. And, we may not like it. I'm surprised markets are ignoring it. Crude prices almost at a 3-month high. Rice prices at a record high. Energy prices have started going higher, whether it is natural gas or heating oil. It's happening at a time when demand concerns, I guess, are really very evident. But given that China, you're getting the right signal, just the right noise has started again from China that for the first time, the Chinese government now is very worried about what is going to happen to the Chinese economy. There could be a trade in metals. See, you always rent metal stocks, you never marry metal stocks. I always say that. So I think a trade in some of the metal stocks really could be coming, largely because of the interplay between the dollar index and the fact that commodity as a basket, one always does well. Very rare you've seen that one commodity is going up and other commodity is going, lower. And I think commodity as a basket, I think is really looking a comeback because once you get a signal from Fed that the interest rate hike is pausing, which is what everybody is expecting, there could be a 5-10% trade in some of the commodity stocks because the trade in commodities has already started. Look at crude, like I said, look at energy prices. And just not crude. I mean,
across the board.
Across the board, if you really think about it, from the fall now in the last couple of days, the gains have come in.
An uptick. Yeah, and yesterday we were talking with Peter Maguire as well, who was alluding to exactly the same thing. So that's the outlook when it comes to the entire metals basket and all of the triggers within this space as a whole. But let's move on then to the next stock that we're discussing, Interglobe Aviation or Indigo, just blacked out there. The stock as well has been on a strong bull run. Yesterday, of course, was a different case in point. But what's the outlook given the dynamics and how things are shaping up within the aviation space? With listed players, it's pretty much this one.
So, you normally look at crude, you normally look at market share, but you never can imagine that Pratt & Whitney, one of the main engine suppliers, is going to be calling back and say, we've got to check some of the engines we've given to you and we need to relook at it. Yeah. What is the connection of Pratt & Whitney and Indigo? Well, large part of the fleet actually has used Pratt & Whitney engines. Now, what does that mean? That essentially means that there would be less, the DGCA norms in India are very strict and thank God for that. But if there is an audit which Pratt & Whitney wants for all the fleet, which all the engines that automatically will have an impact on the Indigo's fleet availability, and it will really have an impact on the future orders and future capex expansion. Indigo is on the cusp of expanding right now. The aviation sector is somewhere they've ruled the market share. But if some of their if some of the aeroplanes or some of their, if the fleet really gets into that entire, remonitoring cycle per se, it will have impact on capacity, it will have impact on pricing, and it will have impact on future expansion. We don't know the numbers yet, haven't heard from the management. But for a stock which has been in a bull run, there could be a double whammy suddenly, largely because of crude spike and largely because of this news from Pratt & Whitney.
Okay, there you have it. Those are the important triggers to track stocks on the editor's radar, Ayesha.
Oh yeah, absolutely, and we'll pick up those stocks with Dipan Mehta and our chartists as well. But with markets near life highs, ace investors are now rejigging their portfolios. What are they buying and selling? Sharad walks us through some of these smart portfolios. Sharad?
Well, yes, two important investors in focus today. First is Ashish Dhawan, and over here there's a new entry coming in, and this is Religer Enterprises, almost 1.66% stake coming in the June shareholding pattern. And do remember, Religer Enterprises, it's a turnaround story which the street is estimating. However, there is an overhang coming in, especially for its arm Religer Finvest, where the debt proceedings are still underway. So street is expecting, if there's a positive reaction coming in, so this would be a re-rating candidate. In terms of exits, if you look at it, we have a Birla Soft as well as Zensa Tech coming in. This is an exit coming for Ashish Dhawan. And also, if you look at Porinju Veliat's new entries over there itself, the new entries coming in is Kokyo Camlin and Centum Electronics. Now, Kokyo Camlin itself is dealing with your stationery and is also an important play when it comes to the national education policy going ahead. And apart from this, also Centum Electronics is something which he's holding his thing. Apart from this, increasing in stake coming in is for Aurum PropTech, where almost 136 basis points increase has been there, coming in at almost 3.36%.
Okay, Dipan, what's your view on Indigo? I mean, I'm just looking at the data that look, Pratt & Whitney has called for an audit of all their, aeroplanes, largely because of a technical factor. For a company which was flying, which was literally flying because of the availability, because of what they've done in terms of following a policy, in terms of where the construct of the aviation sector is, could this really be a chink in the armor?
Yeah, good morning, Nikunj. I think aviation is a difficult business looking at the number of bankruptcies which have taken place within the sector. But these kind of risk factors exist when you invest in an aviation company. But from my perspective, on a longer term basis, if you have a 3-year, 5-year type of a view, I think gradually we are seeing very high entry barriers. That's one. Secondly, I think Indigo's strategy has been well tested across various cycles within the industry, and they have come out on top. And in fact, they have been consistently gaining market share. This is one sector which will become like a 2 or max 3, 2.5 player type of an industry. And after many, many decades, we are seeing some amount of pricing power coming back to the carriers. At the same time, I think the outlook, present value of crude and the outlook remains pretty much, I would say, soft to stable. So one of the big cost factors for the aviation companies will be under control. And I know the stock appears to be expensive, but when you want to buy into a specific investment theme, which is more and more travelers using aircrafts, using airplanes to travel, there is no choice but Indigo. So it's in like a special position, a kind of a sweet spot. So even at these levels, or if there's a correction because of some bad news, like what you said just now, are great entry levels for Indigo. Having said that, it's a company in which we and our clients are invested in.
So if the stock falls because of this uptick in crude prices or because of this news of Pratt & Whitney, you would be a buyer. Can I assume that?
Yes, absolutely. See, Nikunj, I think if you look at the moving average profits of this company, because there's a lot of volatility, you will see that moving average profitability is trending upwards and trending upwards at a pretty steep incline as well. At the same time, I think they are building capacity increasingly over the next 3 to 5 years or so. They are one of the most aggressive acquirers of airplanes in the world at this point of time. And they are well on their path to at least maintain their market share. I think the Tatas have a tough fight on their hands. And the strategy is very sensible. I think they want to focus on high margin routes. in a low-cost airplane, and that has worked out very well for them.
I'm going to shift gears and dip and talk about a sector which I know you don't track that much, but sometimes when you see tactical trades, it's time for us to perhaps discuss them. Is there a tactical trade coming in metal? Simply because crude prices are up, gas prices are up, rice prices are up, orange juice prices have gone up, even so much so that my coffee in the morning has started costing me more now.
Well, Nikunj, that's a signal to you to drink less coffee, maybe.
I've taken out sugar already to balance it.
Really pinching your balance sheet, no, Nikunj? The coffee.
Trying to manage.
Just stick to green tea.
Imagine if I save that, there's a mathematical number which someone shared with me. Avoid that one coffee and put that money in a Nifty sip. How much you would have made?
Yeah, well, that's true. And
but
I
I'm
think
okay to let that Nifty upside go. It's okay. I still need my coffee. It's okay.
No, we need you. We need you awake and alert, Nikunj, for all your incisive comments and analysis. And actually, you know more about metals than I do because I really don't like that sector per se, and I don't like the volatility because of the kind of business they are in. They're continuously in the news, and there's a high degree of volatility around metal stocks, around all commodities. At the end of the day, we can't really have a handle on them. The numbers go all over the place. And if you have a 5, 10-year type of a view, sure, it will be in line with the Nifty or the Sensex returns. But in markets like this, you want to really go for the large wealth creators. You want to go for mid-cap stocks, which can go up 3-5 times in the next 2-3 years or so. Companies which don't really have a breakout kind of a strategy on the business model side, and market recognizes them. So all our attention, not just ours, I think every professional investor, the attention is focused on finding these kind of outstanding businesses rather than the metals, which is more for the traders. And this question has been asked me numerous number of times. And my simple comment is that if you're an insider, industry insider, and you can really track the prices, the raw material prices and the end product prices well in advance of the market, only then you have an edge. I think investors like us don't really have an edge when it comes to investing in metal stocks. And I would like to generally avoid looking at the sector. At this point of time, I don't think I have any holding in any commodity stocks per se.
Okay, Dipan, you go grab your green tea while we'll get some coffee and take a very quick break and see you on the other side.